How is everybody doing today? Welcome to another Stock Talk live stream. And if you are on the Discord, you know we got Hayden with us today. Cheers, Hayden. How's it going, man?
Cheers, man. It's a busy day.
Yeah. What you
Like
drinking?
I was, I'm just drinking some cider, having
Okay.
some Marionberry cider. Nothing too special tonight.
Nice.
Yeah.
We
So,
got
what are you
Foo
drinking?
Hat. But yeah, no, I got a summer IPA going, so
Nice.
feeling it. I've had pretty good weather lately, so it's been nice. So today we are going to talk and just kind of chat about small caps and pretty much risk reward with small caps. It's kind of fitting because Tattooed Chef did essentially get delisted today. They are bankrupt. They are no more trading on the OTC. So that's pretty fun. We can see they've had super price action over the last 2 years. So that's been great. But before we get into that, I want to kind of define small caps as far as a market cap. And I've seen some things out there that are like, like maybe up to 2 billion as a small cap. So Vanguard, if you look at their small cap index, their median market cap in their small cap index is about 5.4 billion. So that's like the average size of the companies within the Vanguard small cap ETF. If you look at the specific holdings, it usually ranges from about like 500 million on the low end market cap up to about, I think it cuts off right around 15 billion. So there are some decent sized companies in there that are a little bit larger, between that probably 12 to 15 billion mark. And then for mid caps, I think the mid cap, the average market cap is around 23 billion or so. Yeah, 23.1 billion. And the range for these guys was pretty much started off at that 15 billion range and went to around 45 billion or so. So just for a definition, small caps, previously I was thinking, around 5 billion or 5 billion or less. But according to a lot of these indexes nowadays, small caps can range up to about 14, 15 billion. So just giving the audience a little background, and good to have you here, Fuhat. I knew I could count on you, man. And then before we get into all this, the disclaimer, we are not financial advisors. This is for entertainment purposes only. We just like talking about stocks and chatting about this stuff. So, yeah, let's get on into it. So, pretty much, it's kind of fun seeing this one actually just totally burn. I know Hayden, me and you have talked about it a little bit in the past, especially when it was getting pumped probably in 2021.
Hmm.
Um,
Yeah.
and it was always just kind of like I don't know. It was always really expensive from a fundamental basis, like if you're doing any type of cash flows on it. And it, it just was so stretched when it was trading probably even, especially above like $10, $15. But there were so many headwinds and whatnot. How do you feel about this one?
Um, I feel very good about it. I think, gosh, so there's another guy. He probably won't be on the stream, but I remember messaging Rico about it when he was first in the other Discord. We'll call it the other Discord, the other
The
place.
other.
Um, but I remember I sent him just a very basic, like, here's where the revenue could go, and here's where it's at with 10% margin. And I'm like, I have potentially a fair value of maybe $20, and this was a 5 year timetable, and that's if they hit the, I think it was 1 billion was the revenue number that they needed to hit with 10% margins on the bottom line. Um, but um, I think you and I were calling for bankruptcy very early. Um, I was extremely early to it, probably a year and a half ago. I said this company was going to go BK at some point.
Yeah.
Wish I would have shorted it in hindsight,
Right.
um,
All the
but
institutions were.
I feel good about it. I know, I know they all were, and they were all right. I mean, it's very simple in terms of why they expanded their SKU count too much. Um, and like if you very basic, like if you ever watch, oh gosh, what's the show with Mark Cuban and O'Leary, Shark Tank?
Oh, Shark Tank. Yeah.
I, yeah, if you ever just watched a bunch of that, like you would know the exact wrong thing to do is trying to expand your SKU count, have all of these different products when you haven't even made it yet, when they should have just kept pounding and consolidating their products. So it's
Yeah.
do justice.
They basically
Uh,
did the exact opposite of concentration into operational efficiency and supply chain
mm,
efficiency. They basically were like, oh, we're just going to go everywhere. We're importing all of our stuff from like Italy, right? Because that's where they had their connections, and it was just an absolute disaster. So, especially when we're having supply chain issues and oil was starting to go crazy, it it was
mm.
like I think it was maybe around $10 around then. Maybe it was on the drop from like 10 to 8 or something, but oh man, that alone like made me so bearish on it. Um,
Mm-hmm.
but yeah, they just let alone they couldn't even publish their financials on time
Probably
or
didn't want
correctly.
to. I'm pretty sure, I'm not going to waste my time looking it up, but I'm pretty sure they had negative gross margins in their last reported
Yeah,
financials,
yeah, they did.
which I have not seen that before.
And I think they were
Um,
like it was like negative gross margins and they're projecting for like 1% or something like that. It was like, really? Oh man.
yeah, I mean, you saw it with God. I mean, they went through $100 million for for where they were as a company. They went through $100 million faster than a company that I've seen um, in the public markets, considering where they were with their size and what they were doing for the
Yeah.
company. It just vanished. It was gone like that.
Yep. I mean, it's funny how you can do some things so right, like spacking at that time and getting loads and loads and loads of cash and then blow through it. And in 2 years, you totally destroyed your business and just totally
Mm-hmm.
wasted your opportunity because they had a good opportunity. Um, they were flush with cash after the SPAC,
Mm-hmm.
liquidity was great. Markets were great. They just did everything wrong after that. So,
I mean, they were profitable.
yeah,
Q4 of 20.
yeah. They
I mean, they were
just went
profitable.
profitable. So,
So what do you do?
uh, man. So,
So what do you do?
yeah. I mean, I unfortunately there were a lot of people in the other Discord that went a little bit too heavy on this one, and you hate to see that happen, especially people that are later on in their investing or later on in life and don't have the time to recover from it. But
Mm-hmm.
you have to be so careful with I would say any small cap in general, and we'll get into kind of our views of small cap and our investments in small cap, and um, just a reminder, so like under 15 billion market cap, which actually since I redefined that, I probably need to change my spreadsheet because I've got some that are currently defined as mid caps that would be small caps now, because
Mm-hmm.
I was originally thinking like small cap under 5 billion, mid cap like 5 to 15 or so, and maybe like yeah. But so I need to redo
Mm-hmm.
that because technically, well, I guess Dropbox would be small cap, Musa would be small cap, Crocs would be small cap. A decent amount of positions that I have would probably two or three would fall from the mid cap to the small cap category once I do that. So um,
Yeah, I'm loaded up with small caps in that case, so
yeah,
it's fine.
yeah. Well, and so this is kind of why we got um, the topic for today's live stream was from somebody in the Discord, kind of asking, are small caps primed for a run? They shared a Yardini chart showing essentially um, the valuation metrics of small caps like kind of falling through uh, the floor,
Mhm.
and just kind of asking, are small caps in the future, in the near future, prime for a run? Um, my my answer to that is I have no idea if they're going to run or not, and I honestly don't care as much, especially when it comes to a let's say um, individual stock picking perspective. I have more things to worry about other than like the sector in a whole as a whole. Like I'm more
Mhm.
focused on the individual companies and how they're going to perform into the headwinds or the tailwinds that I think we're going to in the future. Um, and depending on that performance, that's probably going to be the bulk of the market movement is going to be from those fundamentals and not necessarily from um, overall sector movements. And if we do have a huge tailwind for the sector, I just want to make sure that I'm still in the best names that I believe are, in that market cap range. So, what do you think? Do you think it's going to be the year for small caps next year or two?
Um, I think it's going to be the year for some small caps and some mid caps. I think it just depends on what companies that it is that you're looking at. Much like you, like I don't care too much about what the indice is doing. Like I'm comparing myself to SPY or comparing myself to the Qs, um, because I manage the entire thing, versus having a heavy exposure to SPY or to the Qs or to SCHD, all of these other indexes. I don't own any, so um, I'm not sure what's going to happen with small caps in a broad basket. But I mean, it's interesting to see the valuation divergence. And I think the last time that something like this happened, it ended up being a pretty decent rally. I was listening to a podcast too. Um, I think it was the Compound and Friends, and the guy that was on there was saying like if you go back 100 years or something like that, that small caps have vastly outperformed the S&P 500 over those 100 years, but they only outperformed the S&P in 15 of those years. So there's not a huge sample size for where small caps generally outperform. It just happens all at once. So if it does happen, it's going to happen very quick. If it does
Yeah.
happen, in my opinion, it'll just basically be a catch up, and we'll really see what market breadth looks like. And when I say market breadth, what I mean is just this bull run that we're seeing in particular in large caps, just seeing that widen out to the broader market,
Yeah.
um,
I think it's
in general.
year to date, something like I think the SPY's up about what 15% or so, if I remember correctly. And
Yeah.
of that positive return, I think it's the top 10 stocks in the SPY account for 13.5% of the positive return. So
Mhm.
it's very heavy weighted to the Apple, Microsoft, Google, tech weightings of the SPY. So when we're talking about
Yeah.
like market breadth, we're talking about like where kind of all sectors are lifted up evenly across small cap, mid
Yeah.
cap, and different like healthcare, tech, industrial, like that type of move will move like the entire market. Where it feels like what we're seeing right now is more of the kind of the rotation back into tech and the momentum move from tech
Mm.
kind of carrying the entire market.
Yep, I agree. Speaking of breadth, though, something that I thought was really interesting, and I haven't confirmed this, I heard in another podcast last Friday actually that the NASDAQ is going to be looking at rebalancing the portfolio. They've only done it less than 5 times, I think, in the history of the NASDAQ, I believe.
Interesting.
Um, so I thought that was really interesting. So
Yeah.
I think if that's true, I think there's some realization, same exact type of thing that we're saying, that it's extremely consolidated. Um, so could make sense just in general to be rebalancing. But I'm looking at the year to date right now. Qs are up 38%. SPY is up 16. Then IWM, actually I'll use VIOO. VIOO is up 7.3%. So I mean, it could be. It's an interesting theory. I just think that it just really matters what companies you own at the end of the day. Um,
Yeah.
and it's not going to matter as much about the overall index performing well. It'll be more about companies performing well at the end of the day in general. So,
Yeah. Well, and it can kind of make it frustrating when you're looking at if you are allocating a portion of your portfolio to individual stocks and tracking yourself against the index, because you're really tracking yourself against like 10 companies right now. Like that's what you're doing. um, so
yep.
especially for like for me personally, I'm usually running into places that I'm finding value, and that's usually where everybody's running away from. So recently, a lot of the buys have been like retail, healthcare, and just some areas right there, which is typically and obviously REITs, real estate, because that's been absolutely trashed lately. But that can kind of be rough because essentially, like a lot of times, if you're doing that type of strategy, you're accumulating into the more depressed assets, and you might not be taking as much of the run, at least in your individual stock portfolio. Luckily, I've got some good tech exposure, but it's yeah, those those sectors right now that are hurting. I feel like there's a lot more opportunity there than there is, especially in the mega tech right now, with like Apple and Microsoft and things like that.
Yeah, I'm the only big tech exposure I had this year that was meaningful was Meta, and I got out of that um, much earlier than compared to where it's at now. Um, so I think taking that into account for myself, I feel really good about at least what year to date looks like from the portfolio perspective, and I've had my share of losers. Definitely had my share of losers this year so far. Like Digital Turbine is one in particular, but it's
Yeah.
been weighted appropriately. You know, and I've had some big winners still though too. Clean Spark, Allison, um, Warner Brothers has been a good company this year to own just for the year to date. There's some others. And there's some others that I've sold that people wouldn't know. Our House, ARHS, small little furniture company. Um, I owned Lovesac for a while. I mean, I have a list. I've been in and out of a lot of smaller positions that have done really well because I didn't have a chance to build them out.
Yeah.
Um,
Yeah.
but it's helped the overall performance for the year for sure.
So
It's been meaningful enough.
when it comes to small caps, I don't personally I don't change my valuation style at all when it comes to small cap. So like I value a company the same whether it's a small cap, a medium cap, or a large cap. It's all based off of what I believe is the truest form of cash flow to the business, and then kind of like a
Mm-hmm.
pricing model for the next 5 years or whatever, right? So with that in mind, and I think you do probably something similar, more in a DCF fashion potentially.
Mm-hmm.
Um, but with that in mind, like how do you go about like analyzing small caps? Is it similar to the based off of cash flows, and then also when you're looking at establishing position in small caps, what are your kind of your guardrails as far as like allocation size and things like that?
Um, so let's take Crocs out of the conversation altogether because that's a company that I know extremely well. Um, but outside of that, it depends on the industry that it's in. So a company like, wow, it ran today. A company like HZO, um, where it's yachts, it's boats, in terms of just selling that basically. And so a company like that, where there could be definitely extreme industry headwinds, I will just put a larger amount of what I want my total return to be in terms of a CAGR,
Yeah.
essentially. That will be essentially my guardrail. Um, and it just depends on what the company looks like. I've had to make a lot of changes to my model this year um, because I could never screen out Amazon as a buy. I can never screen out Google as a potential buy. There was companies that were really good valuations that I just could not screen out as a potential buy, and not because the model was broken, but I needed to add extra layers to it and add additional context to the companies when I was analyzing them. So with small caps, I don't change a whole lot in general in a basket. Like I'm willing to make a small cap if I really know and understand the business and it hits the right price points. I'm willing to make a small cap a 10% position.
Okay.
I'm personally willing to do that. Um,
Man,
Typically,
that's
the max I'll be
that's
looking
some
for is
guts.
five. Well, it just matters on how well I know the business, right?
Yep.
So
No, exactly.
putting Crocs back in the discussion, that's a company that I knew at an extremely high level. I felt like anyway, and so I made it a 10% position, um, well before it's low, knowing that dude was going to be accretive, and knowing that the company was doing significantly better than what price action was saying. Like they had an
Yeah.
A plus earning. They had an A plus earnings. We talked about it. They had an A plus earnings, and they're down, I think, 10% on the day in 22, whatever year that was.
Yeah.
That was 22, spring summer 22, I think.
Yeah, that was the earnings where it popped, didn't it? It like popped to like 80 something and then it just sold off the rest of the day, right? And it just like it was really weird. I thought the earnings was amazing. I was stoked on it. The initial move was really positive and then it like ended the day like down, I don't know. It was like 5, 6, 7% or something like that.
Yeah, I think they reported the week of May 2nd. Maybe they were at 68, and they ended the week at 55.
Yeah.
So I think it was right around that time frame. That was brutal. That was brutal. I mean, it's really hard to stomach that
Yeah.
when you see something happening when your company is doing extremely well and it's going the wrong direction
Yeah.
fast. It was just one of those where it's like I don't understand. Um,
Yeah. No. I
so that
totally
will
get that.
challenge me.
And I've kind of started to remedy that with just kind of staggering my buy zones, just
Mhm.
because I'm coming to realize more and more that the market I think is going to continue having very high exuberance levels and then very high like bearishness levels, and it's probably going to happen more
Mhm.
frequently. Um, so the like I was buying Crocs when it went under 100. I think I started buying heavier in the 70s, 80 area,
Mhm.
and I was like, I think my bearish buy point was like 48 or something like that, or 50 or like 45, and
Mhm.
at the time everybody was like, oh no, that'll never happen, and then it was weird because that seemed like almost just market sentiment downtrend, where they
Mhm.
continued to perform pretty well. They were hitting their numbers. I guess we did have a little bit of uncertainty with the Hey Dude acquisition, how that was going to play out. But yeah, it ended up getting down to like $47. And
Yeah.
looking back, I wish I would have saved more of that initial capital that I allocated, that I was willing to allocate towards Crocs for those lower areas where I thought the
Mhm.
most kind of like ridiculous potential would be. Um, but
Mhm.
it's funny. I gave you a hard time for saying 10% in a small cap, and then I realized in my individual portfolio I have KRC that I think is under a 4 billion market cap, and it's 11.8%. So
Well, that's out of your individual portfolio, not your total,
yeah,
right?
it's still only
Yeah.
like a 3% position or something like that. But I've
Yeah.
like more and more I've been trying to manage my individual stock portfolio as if it was like my entire portfolio type thing, where
Yeah. Hmm.
just because I feel like it's healthier because if it continues to grow in a really good way, and I'm managing those risks in a way that like I have way more capital put up, which it's continued to grow and just kind of eat into my allocation of my overall stock portfolio. I think it's up to like 27% now. Um, but yeah, it's one of those things where I kind of gave you a hard time, and then I was like, oh yeah, I'm kind of doing the same exact thing on the individual
Yeah.
basis.
I mean, I have right now. I have a small cap that's my it might not be my largest now because I've reshuffled some capital into other positions. But Allison Transmission falls in this particular context. It falls under as a small cap, and it's right around a 10% position for me right now. It didn't start as that, but
Yeah. So that's another interesting topic is like especially when you're managing these small cap positions. Is your thought process different on taking profits sooner? Potentially.
um, not really, because I've done it with large caps too. Like I did with Salesforce earlier this year, where I bought, it wasn't built out, and it went up 15-20% really quick. Like, should I have held it? Looking at it now, sure, but it
Yeah.
wasn't. So I look at it this way: I made Salesforce maybe a 1% position at the time, um, and like the amount of work that it's going to take for me to actually to legitimately just keep up with the company, and considering where my portfolio size is right now, is it worth my time to manage that position the way that it needs to be managed? Or does it make sense to just take the quick profit off the table and get it into another idea that I have, and build out something else that's larger that has potentially a better opportunity, just from a dollar perspective right now, because I'm still building at this point. Does it make sense to get that moved over to another opportunity though, where where I feel like the upside is potentially better with larger percentage of my book if something gets away from me quickly. Um, it happened. Let's see, they're all in my next to buys. It's happened with Signet this year. It happened with Metafast this year. It happened with um, Charter more than once in the last year.
Hmm.
That's not a small cap though. It happened with Williams Sonoma again this year. That's the second time it's happened to me. Um, Whirlpool is a little bit more unique, but yeah, I took it off quick because it wasn't big enough. Um, so I'll be quick. I'm not gonna sit around and wait because like 1% of my capital is a lot different than 1% of your capital when you're talking about the amount of dollars that are actually in the portfolio. Like 1%, a 10% move or a 20% move off of or even a double off of a 1% position for me when I get it put on is not moving the needle overall for my net worth the same way that it could potentially for you or for some other people that we know.
Yeah.
So I'll take it off quick personally. Yeah.
Yeah.
How do you feel about that though?
So it really depends on I guess the small cap and if I think the move is justified, right? And I don't know. I've made mistakes here and there, and similarly, if I don't get a position built out very like to the size that I want to, and then it runs on me, like I'm more likely than not to take it off pretty quickly. I think I did that with SMCI, um, and I shouldn't have now because like I think it's up like 140% from my purchase now in like a month and a half, um, like 2 months. It's just absolutely insane. But I put it on a position in SMCI, and I think I bought it around 98, and I was really hoping for a further drawdown to around 70 to 80 to put on a heavier position and allocate more capital. And
Mhm.
unfortunately, so let's see. I bought right there.
Yeah.
like right
Yeah.
at that dip. And then I was like, okay, maybe we'll get a retest of like 70 and that'll be great. And then it ended up just pushing, gosh, it ended up pushing to about like 130, I think it was. And I was up 40 to 50%. And I was like, okay, I'm just going to take it off because it was a very, very small allocation.
Mhm.
You know, it was almost like, it's almost like discouraging when that happens to me because I'm like, if I want to make this like a, let's say, a 5% position and I only get like a half of a percent or like 1% put on, it's like, man, I'd really like to like for it to go down more. But no, that
Yeah.
it just went off to the races. I think it's up about 182% from my initial buy point, and I only got
Mhm.
like 40% profit on it, which I mean, I can't really complain. 40% profit in like, 1 month or
A
whatever.
month.
Great. But like,
Yeah.
man, that was insane. Um and
Well,
yeah, I
I
think
think
go ahead.
I think you hit on um, you said it without saying it. You took it off because it ran. Well, number one, it ran away. And number two, at, like for your process, were you buying at 130?
Oh, was I buying at 130?
Like let's say that you were modeling it out at,
No.
when it was at 130. Were you buying? No, right?
No.
Um,
No.
So I think it's still really important to have a process and stick to that process um, as much as you possibly can. And there's of course going to be special situation companies. A couple that I have are like Overstock or the Clean Sparks,
Yeah.
companies like that, where those are clearly special situations. Um, but they can potentially provide significantly outsized return if you manage the position properly. Um, like if it's a company where it's not something that's special and it's something that you're trying to manage the position based on the valuation, then like if it runs on you and it's not a meaningful position and you've brought forward more than 50% of your returns or whatever it was probably at that point, like you've won. That
Yeah.
you're basically saying you want to market underperform based on your process for the next, in this case, 4 years and 11 months,
Yeah.
essentially in that company. So I think process and what you've done, what I've done, and what a couple of others have as well. Um, it's just a development of that overall process that's extremely important, um,
Yeah.
and people need to have that overall and stick to it.
No, for sure. Um oh, my frames are tanking. My quality is bad apparently. Um no, for me it's kind of, I don't know, it's kind of tough cuz I I definitely going to stick to my process, and I think really everybody should stick to whatever process they have, but also always make small iterations to improve your process because it's never going to be perfect. But I think there's like this fine line of being able to stay consistent in your actions, while also noticing the flaws of your process and slowly like fixing them, um,
Hmm.
in order to hopefully, uh, make the overall process better in the future.
I agree, and that's why I had to go back and look at what I was doing with part of my process when I was valuing companies because
Yep.
I missed
So
out on Amazon when it was a buy. I missed
yeah,
out on Google when it now shows me it's a buy. I missed out. Well, no, I didn't miss out on Salesforce. What's
I got a
another big one?
question. I got a question
Yeah.
with that process change was, and you don't have to say anything specific about what you changed or anything, but was part of it just, were you just using too high of a discount rate for those valuations? Um,
Mm,
no,
no, let me pull up one. It wasn't the discount rate. It was
or
where's
target KGAR or whatever you want to
Amazon?
call it.
No, yeah, it wasn't that. So like And you've seen my model. So my discount rate changes for every single company just based off of
Yeah.
a few different variables. And the CAGR is for what I am willing to do and go after. So like, let me see here. So the way that the original model was set up, I'm looking for a 12% return. Discount rate on Amazon on the original model, discount rate 9.97%. I'm looking for a 12% return. I have buy prices of where 116 where I wouldn't buy, 91 where I would be putting on a position, $80 where I'd be adding more, and then it drops way down to 59 and then 46 for me to build out
Okay.
a full position. Um, didn't really hit. Whereas after I make changes to it, um, I get more 133 where I'm not putting a position on, but that's where it comes into. Um, 114, 102, 84, and then 71. Or I have another piece of the model where I would have to look at the numbers on it to see which one I would probably be using, but then it's 150, 137, 123, 109, 95. Um, so
And
like
what stock is this for?
Amazon was a buy. This is for Amazon.
Amazon.
And
Yeah.
yeah, and you've seen the valuation tab on it before. So I'm running a lot of different things and variables. Part of it was I started looking more into how I should be looking at valuing the companies. Um, Changing whether I should be looking at EV to EBITDA, whether I should be potentially looking at price to earnings, whether I should be looking at potentially an average of what's going on with my model. Should I be looking at more of a perpetual growth model style? Should I be looking at EV to EBITDA? Should I be looking at price to earnings? Those sorts of things. And um, using what the capital stack of the business looks like with their debt stack. And then I'm sucking capital leases out of it when I'm looking at it from a market cap or a true debt to market cap standpoint, and trying to just, it looks like a lot of noise, but it's a lot of noise that makes sense to me,
Yeah.
essentially. Um, but it put a lot of things back into perspective and a lot of things back into reference where things could have looked like my portfolio could have looked a lot different this year um, if I had this earlier. But now that it's a piece of part of my process, it's been a really good year for where I've allocated capital since then. Um, a lot of different companies that have done well for me in a very short amount of time, and maybe it's probably I'm just getting lucky, to be honest, on a lot of different quote unquote swing trades. But it's something that has worked out really well this year, and so I'm always going to be looking for ways to improve that if I need to.
Yeah. Yeah, definitely. So Fuhat said I didn't introduce you. I thought I did. Maybe the stream lag, but this is Hayden. So he's pretty well known in the Discord. I think we've known each other now for at least online for what 2 years or so, 2020 ish,
Since the other place.
since the Discord that will not be named.
Exactly.
And I don't know about you, man. I got my degeneracy out, and I flushed, I cleansed it, and
Yes.
trying to move forward.
Well, there's not a lot of people left that are actually still doing it. Um,
No.
Continue to actually really put the time in to study and learn
Yeah.
and like to really do it. Um, 2021 or last year. Anyways, 2021 and 2022 washed out a lot of people.
Yeah, it did.
Um,
They're all now dividend investors.
that's right, Dan. That's a shot at you if you're watching. Um, I mean, it's been something that's healthy for the market too. Um, I don't know what's going on necessarily, but there's less, I feel like, just degeneracy throughout the market. I don't know if that's really indicative of anything happening with the VIX because it continues to make, um, or it's extremely low right now for what we're used to over the last 3 years. So I don't know if that has anything to do with it, but it's been something that's healthy. I mean, it's the
Yeah.
same thing in the dot com bubble too. Something it's been a really healthy movement and change for the market. It's something that needed to happen um, within market participants. I feel
Yeah.
like.
It's interesting because I don't think a lot of like in the future, I don't know if people are going to realize how like stupid it was, because there's not going to be an index that really tracked like the unprofitable profitable spec companies that all of this craziness was dumping money into. But there were
Mhm.
so many that were just hype machines. So it'll be interesting to see how well this one is remembered. But yeah, uh, going back to Amazon a little bit. Now I I did get a position built out, and I think I made it like my second largest holding or so in the 90s, luckily. And
Mhm.
that was with it in mind being that if it got down to something crazy like 60s, 50s, I was going to go a lot probably heavier.
Mhm.
But I had the same exact issue when I was modeling out Amazon. It's so hard to be able to, I don't know, for them to be able to calculate how much cash flow they could just turn on like that. Um,
Mhm.
because they do so much reinvestment into growth that it's really hard to understand, at least for me, like what type of profit projections they're going to actually have when that scale tips. So I think my model was like, I think in the 80s was my base buy price. Maybe,
Mhm.
but I had really wide scenarios because I was just having a really hard time modeling it. Um, and in that case, sometimes if it's something like a large cap tech, sometimes I'll go off of more generous market multiples in the past
Mhm.
because I don't want to be at like so much of a disagreement with the market on a really solid company that I never actually get an opportunity to get into it.
Mhm.
Because I think like my bearish buy point I think on Amazon was like $50 or something insane.
Yeah.
Um, was that kind of like what you were seeing too when you were looking into it, however long ago it was?
From a buy point,
Buy
well, this
point
is of
or
course.
just general?
I mean, this is where I think I went, where I had it wrong and why I knew I had to change. Because I was looking at it originally with the 50% CAGR that I was trying to target, um, 15, not 50. And to really make it a big behemoth position, it had to go down to $41. Like, just based on looking at the model that I originally had for 15% CAGR. Um, and like that, it just wasn't something that's realistic.
Yeah.
Google, same kind of things. I mean, Meta, it got there, but that's, I would consider Meta a much more unique situation that ended up happening. Um, and so, yeah, Amazon's one that I struggle with as well. I think it's one of the more difficult companies to properly value, and that's why you'll see prices and price targets that are huge range overall in terms of where it could be or where it should go. Um, so I mean, Amazon's a hard one, just in general, and it's hard to project because you never know when they're just going to say, "Let's be cash flow. Let's be about cash flow,"
Yeah.
because they don't really have any reason to be cash flow. Like I'm looking at their market cap, and this isn't all the way updated. I don't think. Um, like they only have a, not including capital leases, it's only between 6 and 8% debt to market cap. Like they could still leverage up significantly the business if they wanted to. So they have no reason to. They have no reason to just be about cash flow when they're in all of these different.
Yeah.
When they got their hands in almost every little thing. So
Yeah.
um,
The reason I was, I don't know why I stretched a little bit initially on Amazon, being like, okay, I'm just gonna buy it, was just because of my bullishness in the cloud compute space. I think that's gonna be like crazy tailwinds for these large cap techs, Microsoft, Google, and Amazon for, probably decades. Um,
Mhm.
it'll be interesting though to see at what point it kind of gets somewhat commoditized and we see a lot of price rigging pressure from it. But I think they've probably got a decent runway before that happens. Um, with Meta, man, oh dude, it's hard. Like, I'm trying not to get like um, biased or like
Mhm.
used to the thought that these type of moves are going to happen and I should wait for these moves because this type of a move in a large cap tech like with the quality that Meta had, um, I
Mhm.
don't know if I'll ever see anything like that again. Like it got so ridiculously cheap. um,
Mhm.
76% from highs, especially for its market cap. um, and the rally has absolutely been insane. I've had to tell myself
Mhm.
that like I can't expect that to happen again. But and
Mhm.
I think I
Definitely
when
not.
I was buying Amazon and Google and establishing those positions, which I got them built out decently. They're like what KRC overtook Google now because it's bounced back. Um,
Mhm.
but they're pretty much one, two, three in my portfolio. I think I was probably a little bit too greedy with them. I think my recency bias of Meta getting hit so hard kind of made me a little bit greedy on my entry points for those.
Yeah, a little gun shy. No, I get that. Um, Gosh, dang. I'm looking at my original valuation for Meta. I wasn't supposed to put on a big position until it hit the mid 70s, and we almost got there on the original.
Jeez.
Um,
Ooh.
like in terms of how cheap it was, I mean, for how I have things updated, 10% position at 101 would have been where I would have put on a really significant position. I would, and with situations like that, I just keep weighting it at I would just keep the weight where it's supposed to be. So it goes down a percent. I'm reweighting that. I'm putting 1% of
Yep.
capital back into that to keep getting the weight correct in the for the portfolio. I can worry about tax loss harvesting or doing whatever I want to do with playing and managing the position later. Um, but I would be maintaining that weight all the way down in that situation more
Yep.
than likely now. Um, Wish I held on longer, but it was fun while it lasted at least.
Yeah. Yeah. No, I did something similar. I think I maintained the weight at 3% overall allocation, but then when we had the flush down into like 190 territory, I increased my allocation to 5%. So, um,
I thought
yeah.
you made it way bigger than that.
Huh?
I thought you made it closer. I thought you made it way bigger than
It
that. I
would
thought you made it
well,
between 8 to
it
12.
was like 40% of my individual stock portfolio. It was 5% of my total book.
Okay, gotcha. That's what you mean, the total book. Okay.
Yeah.
Yeah,
So
yeah.
it was on an individual stock basis for the allocations that I was, because I think at the time I had about 15% allocated to individual stocks. Um,
Mm.
it was like, yeah, 39, 37, 40% of my individual book
At the bottom or when it was going up?
at the bottom, like
At the
at
bottom.
probably
Yeah.
90s somewhere, 95,
Mhm.
something like that.
Yeah, that's the thing. Those are probably I see opportunities like that in large caps. Might see that again twice
Yeah.
the rest of your life. A specific large cap company in terms of the opportunity. Um, So it's one that, and we in the multiple communities that we're in, we talked about it. Like we knew we all were getting in and buying. Some of us still holding, some of
Yep.
us still holding, some of us still not. And we won't. We're not going to see that probably again unless it's actually a company that is on its downfall.
Yeah. Well, and that's the hard part is like, you could, I mean, we all could have gotten trapped, you know, like who knows? I I was fairly confident, and I think a lot of us were fairly confident in Meta going forward. But a lot of these large caps to get down to that type of level, they're going to trap a lot of people, and it's actually going to be a constant decline um, as they kind of just deteriorate. But yeah, so let's
I
see.
mean, and we saw it in the numbers though with Meta. Like at least me personally, like I was listening to those calls. I was listening or
Yeah,
rereading those transcripts, understanding where the money's actually going and where the narrative was in the media at that point. Because uh, the narrative was that they were spending all of this money on Reality Labs, and a significant portion of the capital expenditure was going towards Reality Labs. And that just wasn't the case
yeah,
at
it was like
all.
17%, something like that. I think
Yeah.
we all dug into it, and yeah, it was the same thing. And like from a technical perspective, when I was looking at it, I was like, all of their capex is legitimate, and they need to do it. Like they need to
Mhm.
spend this money. Like it is not cheap to run a hyperscaler, and to uh, increase your compute capabilities to what they need to do for getting around the like Apple ID stuff or whatever it was. I forget what
Mhm.
it's called, but Apple IDFA.
Mhm.
Um, they had to do that because basically all of their marketing now is going to be reliant on AI processing. Um, so
Mhm.
yeah, it was a very interesting situation where like I think you had the pullback and the normalization from marketing spend decreasing from like the COVID high coming down. You had a bunch of bearish sentiment, but then you also had like um, really good fundamentals at the same time.
Mhm.
So yeah, I don't know. It'll be interesting to see if we see anything like that again.
No, I don't know. I don't know that we will. The only one that I would put a potential bet on right now, and something drastic would have to happen in just how we socially interact with technology. The only one that I could see based on right now in terms of valuation would be Apple. That
Yeah,
like if something comes out and disrupts the iPhone, then um, I just don't know what that could be with how we socially interact with people, and what we have in our hands or in our pockets as we're walking down the street. I have a really hard time believing the narratives of like we're gonna have these smart glasses walking down the street and
yeah,
we'll be interacting with somebody else from across the world using our glasses while we're walking down the street, while we have to manage variables like what's happening with traffic, what's happening with people that are right around us walking down the street as well. Um, I have a hard time believing that. So, yeah, I don't think that we'll see it again.
yeah. No, I agree. I think we will see some really nasty declines just based off of re-ratings, like valuation re-ratings.
Mm-hmm.
I think there's a decent amount of really high quality companies that are trading at pretty crazy values right now, and um, including Apple. And if that sentiment ever breaks or ever gets questioned, that could be nasty. It could be a
Mm-hmm.
30% decline, 35% decline just based off of a multiple re-rating. Um, we'll see if it happens, but yeah, I mean, Apple's kind of trading like a Coca-Cola right now, like a consumer staple have to have, and it probably should because we're so reliant on it. But yeah,
Mm-hmm.
if that type of narrative ever cracks, it's gonna be fun.
Yeah, it would be nasty because I'm looking at let me go to 5 year. 5 years leading up to 2020. This was an average price to earnings of 14. If you take the trailing 5 years, it's a trailing earnings of, or no, this is for next 12 months. Excuse me, this is next 12 months earnings. Average mean of 23.54 in the last 5 years. So just massive. Those are these are the type of companies that I have a really hard time trying to figure out what a good fair value would be.
Yeah.
The ones that have traded all over the place when I look at it on a 10-year, and it's gone from 14 up to a 23 in terms of the average multiple paid. Those are the
Yep.
ones that I have a really hard time trying to figure out what it is that I should be paying for it. So then I usually sit those out.
Yeah. No, I am the same exact way, man. Same way. All right. Well, I think we are coming up close to an hour. And keeping an eye on chat, and everybody says brush. I don't know. I don't even know what stock that is, but do you have any yeah, have you heard of it?
Gosh, what's the ticker symbol?
Like BRSH.
BRSH. Brush Oral Care.
Uh,
Who said that? Look at this. Is this Fuhat?
it might have been. Might have been. Most likely was.
Fuhat, if this is you,
Oh
this
my
is a
goodness.
$3 million. This is a $3 million company.
You can make it 0.001%, and if it turns into the next Apple, you will be filthy rich.
There is actually revenue estimates from one analyst. It has coverage.
Oh my gosh. That's the last time I look at anything from Fuhat. I should have known better. Oh man. So I don't know. I don't know if I want to. I was gonna say, do you want to talk about any small caps that you're interested in? But I mean, I kind of don't like talking about individual companies in the small cap realm, just because I think there's like a decent amount of risk there, and I don't know. People can
But
do
how
their own
small?
research and due diligence on it.
I mean, it just depends.
We'll say over 5 billion
I
market cap, under
over
15.
5 billion.
So for
Okay, so let's see if I have anything. How big is this one?
me, I think I would Dropbox. Well, my holdings probably Dropbox, Crocs, Musa. Musa I think is under.
Where's the market cap?
What
Yeah, that one made
else?
it to 5. I have Allison. Overstock is not even 2 billion. Yikes. Um, oh, I'm not going to talk about that one. That's just a baby REIT. I've been in a lot of retail though. I have Victoria's Secret, Crocs, Academy Sports,
Oh yeah,
Ralph
ASO.
Lauren. Yeah, Ralph Lauren. Um, I've been in and out of a lot too. Um, I bought and sold quickly Target, Disney, Our House, ARHS, Williams Sonoma, Whirlpool, Signet, Lovesac. Yeti has ran away. I was watching that for a while, but now it's ran away. Dollar General, the
That's
right
like
price.
that's like mid cap.
Don't.
Alta's kind of mid cap. I'm trying to figure out what I got that's like actually most of my small caps are probably REITs, honestly. I
Mm-hmm.
think most
Oh,
of
I had
my
Hasbro. Hasbro's another one I had this year
okay.
in space. Um, FLT. I think it's bigger than a small cap now because it's gone up. FLT is one that I had for a little while. Shout out to whoever called out in the oil space, NEX and PUMP. It's been doing really well. I didn't buy them though. So, ACEL is another small cap that I'm looking at. It's done fine. It's got to come back down for me to really want to get interested in it, though.
Yeah.
Um, so, but I mean, shoot, I don't have the market caps on my idea sheet.
So
Um,
I think TTCF at the peak was like 1.2 billion or something like that, market cap
no,
wise.
crazy town, just absolute crazy town. Um, I think I have. How big is this one? Lumentum is interesting, long-term tailwind standpoint. But that's below five. No, I don't like anything above 5 billion actually.
Really?
No, I say that sarcastically. Um,
Oh man.
like I have an end phase on my watch list too, and I was like, I'm gonna buy it tomorrow, and it goes up 5%. I'm like, okay, buy.
Yeah,
Go for it.
I was very interested. I think my buy point was like 120, and I was like, oh, it's got some negative momentum. Maybe it'll get there. And then it just kind of like stopped around like 150s, and I was like, oh, maybe I'll put a position on in like 150s, 160, and then it like went up to like 180, and I was like, oh, okay, maybe not. Which I got
Well,
my
so
double. I got a chance. I got another chance briefly in the 160s, but
yeah,
it's hard because like end phase is one of those that like I just don't have the knowledge where I would be confident that I have an edge against other people, other than
mm,
potentially playing a um, obvious valuation and sentiment swing play. You know, it's hard for me to be like, oh yeah, this is a scream at like 150, screaming deal at 150. Because I think I think off of my evaluation, I was like, 120, I'm getting pretty interested in it, and then like 80s, I would be probably putting on a bigger position.
yeah, I have a bigger position at what's the market cap? Yeah, I had a big position like at 90.
Yeah,
Um,
yeah. I
I
think I
had
was
it
right
as
around
a
there as well.
yeah, I had it as just getting a starter position on before it ran away because
Yep.
I modeled it out really late. Um, the other one that did really well that I should have just held on to was HZO. I bought HZO on its latest earnings drop down to like 25, and now it's at 38. So that's cool.
Nice, nice. All right. Well, I think we are running just past an hour, so we're gonna cut it. Thank you, Hayden, for coming on. It was
Of
great to
course, thanks
talk
for
to
having
you,
me.
and I'm sure we'll do it again, man. You know, we chat a lot in various discords. Always fun to get your perspective on things, especially valuation wise, and you always typically have some pretty good companies to bring up. So appreciate it.
Yeah, man. Well, thanks for having me on. We will do it again for sure. Um, we just have to ban Foo Hot for next time. That's
Yeah.
my only request.
Okay. We definitely won't look into any stocks he says. All right. Later, guys.